Hello friends, and welcome to yet another module under Youth Empowerment with me, Richa. And today under this module we will talk about financial capability and literacy. Well, youth today has to understand the power of financial capability and also how to manage their finances better, because things are more and more easier for them, considering that today's lifestyle, a lot of things depend on the way they use their financial capabilities as well as the literacy in their finances. Let's take a look at the module today. We will talk about what exactly does financial capability and literacy means, how do you become financially stable, millennials and their financial concerns. We will talk about credit card debts as well as the misuse of credit cards, and how do you become financially stable. So that tips is what we are going to be sharing with you today. Let's understand the definition of financial capability. Well, financial capability just does not only mean being aware about what financial capability is all about. It is not just the knowledge but also the skills as well as the resources which leads to financial capability. Hence, financial capability is not just what you know, but also whether you are applying your knowledge to practical use, and also are you willing and confident and having the opportunity to act whenever there is a need to act. A financial capability definition relates to financial knowledge of an individual with his or her own ability to apply that knowledge towards enhancing their own financial goals or the goals of the organization. Now let's understand the definition of the meaning of financial literacy. Well, financial literacy is the ability to understand how does money work, how should you spend the money, how should you invest, where should you invest, and how should you save the particular money. That's important to have a literacy and knowledge about how do you go about all of these things. For young adults, it is actually a start of their working life, their career, and suddenly they have all this salary and paychecks which is coming their way. Then hence it becomes very important to understand the tools of budgeting as well as saving, so that you are in control of your finances even when your first paycheck comes. Financial literacy enables people to understand what is needed, and also to understand that to have a well-balanced life and to have the lifestyle that you desire, you need to become aware of how to spend your money and where to not spend your money. Now we're going to talk about how to become financially stable. Well, the consequences of not learning to manage and understand the basic financial concepts can affect your life, leading to a lot of financial debts, not having adequate funds, getting into emergency funds because you don't have the adequate funds. And hence it's important to understand, to be stable, you need to understand the entire plethora of understanding your finances in the right manner possible in order to avoid any kind of financial loss or bankruptcy and unfulfilled life goals. Financial products that students should understand include opening a bank account for your child when he is very young, so that they understand the power of value of saving money, etc. Also, it's important to understand, make them learn how to own and value their own pocket money. So you can start the youth by giving, making them financially independent by giving them some or the other amount of pocket money every month, which will help them to understand the value of money and the value of saving and spending money. Youngsters should realize that most important goals in financial education is relating money to their lifestyle. The way the elders in the family manage the money actually shows a lot about the family and the goals, financial goals of that particular family. One can join some certification courses to understand more about how to invest, where to invest, as well as read up online, do some research on it, or even talk to people who are knowledgeable about that particular topic. The important thing is, as youngsters and as millennials, you should become financially stable at a very young age so as to understand the power of compounding. Now we're going to talk about millennials and their financial concerns. Well, today's lifestyle is such that a lot of millennials want to go out of their way to impress their friends and also lead a kind of lifestyle which will help them to get noticed. Because of such things which is happening around us, millennials tend to spend a lot more than what they earn, and they end up borrowing, stealing, etc. Well, millennials are burdened with a lot of loan debts nowadays, which is higher than ever. Well, our parents and grandparents never really had to take loans, but today's millennials have to take such kind of loans in order to have that kind of lifestyle that they desire. And also it is becoming difficult for them to buy property as well as any other asset due to the kind of inflation which is there in the market today. Most of them, or rather the millions, wish to live a lifestyle that help them to get noticed, because of which they end up spending and splurging a lot on things which is not really required, like a fancy car or a fancy house and stuff like that. Talking about credit card and the misuse of credit card. Today, more than ever, millennials are faced with this particular plethora of how do you spend credit cards. While their parents may have given them credit card to use, and they use credit cards very often on their day-to-day expenses, but the fact remains that they don't have knowledge about how much money actually goes into paying your credit card bills, what happens when there is a delayed payment, and also they don't understand the higher rate of interest that credit card companies are charging nowadays. Lack of such knowledge is something that has to be dealt with by parents or elders explaining the millennials about usage of credit card. Also, a lot of people today have a low paying job or part-time job, because of which it becomes difficult for them to actually keep a credit card. So having to understand that if you don't have the kind of funds or resources, it is better not to own a credit card. A lot of millennials today are using credit card for their day-to-day expenses, which is actually putting a lot of burden on them, because they are not really, they are so much in terms of dependent on credit cards and plastic money that they have stopped using the actual hard money. Also, nowadays a big portion of your paycheck is going towards repayment of certain loans, and there's less to put in for other expenses like groceries, house, rent, etc. And whenever there is an emergency, it leads to a debt which people have to take because of it. So youngsters and millennials should understand that if a major chunk of their money is going towards repayment of the loans, it is something which is very serious that they have to put a stop on it, or rather try to manage certain ways around it. Now I'm going to share with you certain tips in order to become financially stable, and let's listen to this very carefully. We have to decide today what we spend or what we want to spend in the future. Finding the correct balance is very important. While you may want a lot of things presently, but thinking about what actually you want in your future helps you save the money today in the present time. Also, increasing your knowledge, your value through hard work, trying to upgrade your skills continuously, as well as making some smart career choices is something that's required by the millennials today. Making smart career choices which will help you to get that kind of financial stability early in your career. Also, try and set around certain goals for yourself which are financial in nature. These could be long-term or these could be short-term financial goals. It's important to know how much you want to earn, how much you want to save, what is the lifestyle you want to have with your finances. Also, never forget to plan for retirement. Learn about the various investment opportunities. Today there are a lot of investments that you can do in SIP or in mutual funds, which will really help your money grow, and by the time you come into your old age, all that money has compounded and you really get some lovely returns because of that. Be wise about taking debts. It's very important to understand that loans are available for property, for car, for any kind of vehicle, etc. People are ready to give the loans. But as an individual, are you ready to take the burden of repaying those loans is something that you would have to ask and introspect for yourself. Take advantage of certain tax laws to save and invest money. Well, the government has come up with so many nice, interesting laws which will help you to actually save money. The biggest benefit of starting young is the power of compounding, which happens because of your money multiplying over a couple of years. Well, to conclude this particular topic on financial literacy as well as capability, it is very important to understand that while we are bombarded with so much of plastic money all around us, usage of debit cards, usage of credit card, etc., but it becomes important to understand where to spend, where to save, and also how do you really become financially stable by having set goals which will help you to have the lifestyle that you desire. I do hope you've enjoyed listening to this particular module on financial literacy, and I hope this will help you to save and also help you to become more and more financially stable. Thank you very much for watching, and keep watching, more videos coming your way.